Welcome back. Last month, I told you that sellers weren't putting homes in the market fast enough to replace what was selling, and that's what was driving inventory down. Well, that changed in July. New listings were up about 9.6% over last year, and it's the first real increase we've seen in months. And it's probably going to be the most important number in this report. I'm Matt Bohannon with House Match, and here's your August market update for Sarasota and Manatee Counties. So let's start with the top line first. So closed sales came in at 1438, up 6.8% over July of last year. So median sales price hit 495,000, which is up 3.1%, and that's a new high for this year. So now if you watch last month's update, that 6.8% might look like a slowdown from June's 20% increase. It mostly isn't. June was really measured against an unusually weak month last year, and July is measured against a normal one. So year to date, closed sales are up 7.7%, and the median price is up 2.1%, which is almost exactly where we were a month ago. So the trend didn't break, the comparison really just got fairer. So what's the real story? And here's what actually matters this month. New listings came in at 1610, up 9.6% from last year. Now, for most of this year, that number has been in the negative. So year to date, new listings are still down 6.5%, where July broke the pattern. So active inventory, however, is still falling, and we ended the month at 5460, down 16.4%. So, but watch that rate of decline. In June, it was down 22%. Now it's 16. So that deceleration is what happens when new supply starts creeping up. So month supply, however, is still at 4.0, which is really the lowest reading of the year. And that puts us pretty much dead center of what we consider a balanced market. So if new listings keep running positive, then this is the metric that's going to turn first. So 1 month is not a trend, but it's definitely still worth watching for us. So what does this mean for you if you're selling? So sellers, three things. First, the window is still good, but it's slightly less good than it was in June. So median time to contract was 50 days, up from 46 in June, which is still much faster than the 60 days it took a year ago. It's just not accelerating anymore. Second, sellers received about 94.7% of their original list price, and that's down a notch from June's 95. So the typical seller is still coming down about 5% from where they started. So if you're pricing off of what your neighbor listed at rather than what homes actually sold for, this is the number that's going to catch you. Third, and this is the practical one, if more sellers are coming to market, your competition is increasing. So homes that listed in June had less company than the ones listing in September will. So if you've been waiting for a better moment, the data is really not making a case for you to wait any longer. Now, on the flip side, what does this mean if you're buying? So buyers, the shape of this market really hasn't changed. Your leverage is still going to depend on your price range. So the tightest segments are the same ones as last month. 7 to 800,000 is down 35%. 6 to 700,000 is down 29%. And 5 to 600,000 down 24%. But the picture is loosening at the edges. So 3 to 400,000 range was down only 7.5%. And new listings in that band were up almost 8% in July. So 900,000 to a million is essentially flat year over year, down only about 0.5%. So if you're shopping in that middle price range, you're still fighting for the same short list. However, if you're shopping entry level or just under a million, you're going to have more to look at than you did in the spring. So one more shift, cash buyers made up about 30, almost 31% of the closings, which is down from 32% last month and down over 9% from last year. So if you're financing, you're competing against slightly less cash than you were. Now, for our luxury spotlight, the upper end had another strong month. 198 homes closed above $1 million, which is up about 28.6% from this time last year. But there's a split worth naming in this because between 1 and 5 million, homes are moving a little bit faster. However, in that 3 to 5 million range, time to contract actually dropped 29%, which is a pretty good drop. So above 5 million, however, it's the opposite. Homes in that 5 to 10 million range took 171 days to go under contract, and above 2 million or above 10 million, sorry, took 204 days. So both more than doubled from last year. However, that is a small section. So seeing big increases like that isn't out of the ordinary. And to close it out, one last thing, I want to be straight about it because I said the opposite last month. We have foreclosure sales. They jumped from 3 to 14 year over year. So now, if you're looking at the fear selling news, they could say, well, that's a 367% increase, and that would make it sound alarming. However, it's 14 sales out of 1,438. So roughly 1% of the market. So there's still no distressed wave here, but I'd rather tell you the number than have you find it somewhere else. So, in summary, prices are at a new high for the year. Sales are steady. Homes are still selling faster than last year. And for the first time in a while, sellers are starting to come back in the market. So if you want to know what any of this means for your address or your price range, please reach out. That's always the conversation worth having. So I'm Matt with House Match, and we'll see you guys next month.